My guest today needs no introduction. His company Zepto is quite literally a household name. Aadit Palicha, the young CEO and co-founder of Zepto, joins me today. Aadit, many thanks for speaking to PTI.
Wonderful to be here. Thank you for your time.
Aadit, let me start off with the latest funding round, $350 million from domestic investors. What has been the rationale, and if you could just provide the details of that funding round. It also takes your overall valuation to $5 billion. Your mop-up this year alone has been $1.35 billion, which is no mean feat. Take us through the details of the latest funding round and what does it do for you?
Absolutely. So we recently raised $350 million of pure domestic Indian capital. And, we were fortunate enough to have, I believe some of the highest quality Indian investors around, right? Investors like Ramdev Agarwal from Motilal Oswal, investors like Ranjan Pai, Ashutosh Taparia, and a few other high quality names, right? And, from our perspective, before this financing, we had over $1 billion of net cash in bank with no debt on our balance sheet, right? So we were very well capitalized even before this financing. The purpose of raising this capital was, purely to increase domestic ownership, on the way to an IPO, hopefully sometime in 2025. And our thought process on why we would like to increase domestic and Indian ownership is fairly straightforward, right? The feedback that we've gotten as we're going deeper and deeper into, a potential IPO process is that, being more Indian owned on average in general helps with all stakeholders, right? Helps improve trust with, retail shareholders, helps improve trust with, even, employees and institutional domestic investors, and also helps, with, trust and comfort with the government, right? And so from our perspective, all stakeholders, react positively to domestic ownership, which is why we just raised the largest Indian funding round for a private startup, we believe, since the beginning of the startup ecosystem. So that's the thought process.
So Aadit, are you now at a level that is comfortable for you in terms of domestic shareholding in Zepto? And can we say that Zepto is now actually a majority Indian-owned company after this round? Or do you think there is another round that could happen before the IPO, where more domestic investors could come in?
So, what we're willing to commit is that within the next financial year, sometime in FY26, not at the beginning, not at the end, but within that time horizon of FY26, we will become a, full Indian-owned company, right? That's our ambition and objective, and it looks, quite likely that we're going to get there. And so, from our perspective, we're about to hit that milestone that you mentioned, like a majority Indian-owned company. In terms of the question on whether there'll be another financing before the IPO, look, difficult to say, right? I've personally been, wrong multiple times on, when and where we'd, and from whom we'd raise capital, right? But our thinking is straightforward. Potentially before the IPO, there might be a pre-IPO. Again, hard to commit, depends on where capital markets are, depends on the performance of the business. But if we continue to do well, continue to execute well, and grow as fast as we're growing with the right operating leverage and economics, then, I think we'll probably raise one more financing before the IPO. But again, very difficult to say, very difficult to commit. But what I can tell you is that we will be, a domestic company within the next financial year.
Okay. And the amount that you've raised, Aadit, how do you plan to deploy it?
To answer your question more concisely, we are, investing capital, launching new stores primarily and new cities, right? We've gone from, being live only in the metros to being live in dozens of new cities over the course of the past 4 or 5 months. And what I can tell you, by next quarter, we'll have crossed 50 cities that Zepto is live in the country, right? And that includes the likes of, markets like Nasik, markets like, Indore, markets like Kota, et cetera, right? So there's a pretty big breadth of markets that we're now starting to cover.
How many cities are you in right now?
I'll refrain from the exact number, but we're live in about 24.
Okay. So you're looking at a target of 50 in near term.
That's right.
Okay. And what about the metrics like, your monthly active users, the daily orders, average order value? Are you also looking to grow in all of these metrics? Because really profitability is going to be a key monitorable for the market and for your investors as you, move towards an IPO.
Absolutely. I think our thought process is, we are going to multiply on a scale of billions of dollars in top line. In fact, we already have, without giving specific numbers, but in April, May 2024, we hit $1 billion in top line. What I can tell you is that we're already multiplied on that base, and we expect to continue to multiply. And pretty soon we'll make another large milestone on hitting another big top line threshold, right? So we are growing rapidly and multiplying on a scale of billions of dollars in top line. One of the fastest growing consumer companies in the country right now. What I will also say is that from an economics perspective, like I mentioned, we are continuing to see mature stores turn profitable. We're seeing the inputs in the stores that we're launching perform well, and obviously we're growing well beyond industry right now. But our thought process is straightforward. Like the numbers that we're seeing in our stores gives us 100% conviction that within the next financial year we will be PAT positive, right? We will hit that milestone. Again, not at the beginning, not at the end, but within a time horizon in the next financial year, we will hit PAT positive. We're quite confident of that, and that hopefully will be a positive signal to markets.
And you would do that what are the levers that you'll use to be fully post-tax profit, to have full post-tax profitability by FY26?
So the levers that we'll use, like I mentioned, I think right now the stores are maturing into profitability. It used to take us about 23 months for a store to run profitable. Earlier this year, we hit a milestone of only 8 months for a store to run profitable, and we think that number is going to get faster and faster with less capital. It used to also take us 3.9 crores of capex and operating burn for a store to run profitable. Now it only takes us about 1.5 crores of capex and operating burn for a store to run profitable, and we think that number will also continue to improve over the stores that we're launching today. So, the simple thought process, obviously, we're aggressively ramping up. As we slow down that ramp and let stores mature, that's when the overall business moves pretty quickly into EBITDA positive, which is the crux of an investment cycle, right? Now, if you look at a company that we really admire, like a Bharti Airtel, for example, they're also a world-class example of a well-managed investment cycle that was eventually harvested into huge amounts of free cash flow and PAT today. So we're hopefully on a similar trajectory. We're seeing the every market that we're launching turn profitable, and when we slow down that ramp and stop growing huge multi-100% year-on-year growth rates, and we start growing at like a more reasonable long-term rate, that's when we see these stores maturing and hitting profitability. And what gives us the conviction is all the forward indicators and the EBITDA cohorts per store. And I gave you a little bit of a semblance of the performance historically, 23 months to profitability, which became 8 months to profitability for every new store. And we think that number will keep improving over the next 12 months.
Aadit, just to be clear, what is the timeline that you're targeting for IPO? Is it calendar year 2025 or is it FY26?
Somewhere within calendar year 2025, hopefully. That's our ambition. Again, hard to commit, right? You know better than I do how quickly capital markets can change, but we're optimistic if the business continues to perform this well, that we'll go public in calendar year 25.
Right. You were in the process of shifting your domicile from Singapore to India. What is the update on that? And two, as you gear up for the IPO, what are the kind of things you're already putting in place? Because you are in a state of, you have to be in a state of readiness over the next 12 months or so. How are you putting that fiscal discipline in place? What is the readiness, at your end for an IPO at this point of time?
Absolutely. So,
corporate governance, fiscal discipline, on all of those metrics.
100%. So, from our perspective, we're one of the youngest companies in Indian history to complete a, Big Four statutory audit with no, meaningful financial qualifications, right? Within just 2 full financial years that we completed, right? We basically, the only financial years that we really completed were FY23 and FY24. FY22 was only a partly completed year because the business only effectively started in August of 2021. So with just 2 full completed financial years, we've completed a statutory audit with Ernst & Young with no meaningful financial qualifications, which is pretty incredible, right? I think it'd be hard-pressed to find a company this young, already at such a mature state on, governance and fiscal control. And what I'll say is that, across the board, right, we've built, I believe, a world-class finance, compliance, and legal team, right? I think our CFO, genuinely probably one of the top CFOs in the country. We've built out rigor in indirect tax compliance, direct tax compliance, even, FSSAI, FEMA compliance. We've built a lot of depth there, and I think, as a result of that, it shows with, no real, major, governance issues or lapses even as we've scaled rapidly, which I'm sure you know is not uncommon in other startups in India, right? And what I will say is that even in terms of how we are structuring the board, in spirit, right, or maybe not formally, but definitely in spirit, we believe ourselves to be a professionally managed company. All the power is not just with me, right? It's spread across like multiple good faith stakeholders on the board. We're building out an independent board as well with other high quality stakeholders. In fact, we'll soon make an announcement of one particular board member I'm excited about. But yeah, we're building an independent board. We've got a big 4 statutory auditor. I've got pretty high conviction in the rest of our compliances, and it shows up in the fact that there have been no meaningful governance lapses in the company. And yeah, I think the last piece, even on the question on becoming an Indian domicile company, we're pretty much getting close to completion with that process, and we're ready. I mean, I think it's all the check boxes are either checked or getting close to being checked. So we're moving fast on it, and we're Zepto, so we move quite fast. That's the thought process.
Yes, instant delivery. Okay, let's talk about the scrutiny of quick commerce companies, and there has been a lot in the last few months. You, of course, have seen issues and challenges, and you have overcome them in the past as well. But in this particular case, there are concerns that the rise of e-commerce is actually at the cost of Kirana stores. How do you respond to these concerns?
No, absolutely, Mohammed. A little bit of a long answer, if you'll indulge me. But look, I mean, I think since the time we started Zepto, there have been lots of anecdotal, subjective narratives about quick commerce, right? It started with, there were surveys and there was data that 90% of people don't want 10-minute delivery, right? Which obviously 90% of consumers, even in societies, don't want 10-minute delivery. Obviously, we can pretty confidently say that's not true. There were narratives that, 10-minute delivery is killing delivery drivers en masse. When we actually showed the data, accidents per million kilometers were lower than all other formats of e-commerce, because most of our deliveries are in neighborhood roads and not on highways and freeways.
Internal
not
roads.
on highways or freeways where most serious accidents happen, right? So I think there are lots of narratives that weren't actually backed by real data. This narrative that quick commerce is hurting the Kirana store at scale is also just another data-free narrative, and I'll elaborate, right, with some hard numbers. If you look at the Kate report that said that we are hurting Kirana stores, they quoted a Datum Intelligence study that said that quick commerce has taken over $1 billion of sales from Kirana stores. That same report, page 6, says between FY23 to FY24, there's been $46 billion of incremental consumption added in grocery in India, and in the next 5 years, there's going to be another 200 billion added, which is pretty obvious because India is one of the fastest growing major economies in the world today. And in that, so just to put that in perspective, Mamata, right? $46 billion added from FY23, FY24. That's what the report claimed. And the same report says we've taken $1 billion from Kirana stores. So if we've taken $1 billion, or even if you take the overall industry size today, which is around six-ish billion, if we've taken $6-ish billion, but $46 billion was added in FY23, FY24, and $200 billion is going to get added in the next 5 years, which is the consensus view. You look at the Goldman consumption report, you look at the report that was put out there by even the government of India's own reporting. There's an Invest India study as well. There's 200 billion plus of consumption, and we've only taken 6 billion. Even if we grow 1,500%, we will be less than half of the incremental consumption that's created over the next 5 years. And 1,500% is a crazy growth rate, right? We would be, right? So,
right.
So yes. I think that, if $46 billion of consumption was added, where did the rest of the consumption go? It's primarily gone to the Kirana store. So the answer to the question is, with the data, with the hard macroeconomic data that all of us agree on, I'm sure even Kate will not make a suggestion that Indian consumption is not growing and the economy is not growing. Right? It's obviously not the case. With that data in mind, we're in a position where it's economically impossible that the Kirana store is shrinking. We are growing for sure, but so is the Kirana store, so is other formats of commerce. So I think that's one. But the reason why that narrative is particularly dangerous, Pamita, is because it actually hides from all the net positive we've done for the country. This industry in 36 months has created 4.5 lakh jobs. And you'll be hard-pressed to find other industries in 3 years of existence creating 450,000 jobs and multiplying. The past 90 days, Zepto has created 25,000 more jobs. And, the way that I look at it is, the wages of those jobs, 23,200 rupees on average, at least for Zepto, when you count the delivery partners, you count the pickers and packers, you count the line haul staff, the truck drivers, you count the people on the back end supply chain, like the farmer packaging centers and the farmers that we work with, tens of thousands of them. The average wage is 23,200 rupees, which is meaningfully higher than what you'd get in a job that was employed in like the informal economy, right? Where I think it's not controversial to say that regulations like minimum wage aren't really adhered to as much as we'd like in the informal economy. And that's what we see in our data as well, right? Before gig work, before let's say Zepto, Zomato, Swiggy, a delivery partner on Zepto was making around 10 to 15,000 rupees at best. A lot of them were also unemployed. Post Zepto, they're making north of 20,000 rupees, right? So it's wage additive. We've created hundreds of thousands of jobs. We will contribute as an industry in the next 3 years $1 billion of direct taxes, not indirect taxes, right? For that you get anyway when you sell FMCG. Indirect taxes like TDS that don't happen in the informal sector. We will contribute $1 billion of direct taxes in the next 3 years. And most importantly, this is Indian technology and Indian innovation. We're making the lives of tens of millions of consumers easier and better with a better service. And it's been built with Indian technology. So it's real infrastructure. I think it's a fantastic thing, and we should be celebrating new Indian technology. There's nowhere else in the world at scale where you can tap a button on your phone and you can get your day-to-day essentials like shampoos and rice in 10 minutes. There's no other country in the world. That doesn't happen in the US, doesn't happen in China, doesn't happen in Europe, and it only happens in India in 2024, and we think that's something to be proud of. So net, to answer the question, from macroeconomics perspective, the way that we're growing, we're not shrinking the Kirana store. Everybody is growing. The data itself that Kate quotes shows that. And we're creating hundreds of thousands of jobs. That's wage additive. And I think that that's a net positive for the country. And we feel strongly about that, which is why we've been outspoken about it. So yeah. And last thing that I mentioned, Mohammed, is the reason why we feel so passionately about telling this message. It's not because, we are, greedy capitalists, right? We actually, Kevalia and I and the whole team here, we work as, we're working hard because we're excited about the value that we're adding to this country, right? And this is our life's work. And we are genuinely doing it because we think it's good for the country. We've not sold a single share. We've not taken any meaningful salary. Right? We're just excited about building a really, really respectable, admirable internet company out of India. So that's why we hope that, the message is accurate and clear about the value that this is adding. Not for our sake, but I think it's a net positive.
Apart from Kirana stores also, there are other concerns that have been raised, other allegations that have been leveled, and these pertain to predatory pricing, for instance, preferential treatment with suppliers, also related to food safety itself. As an industry, I mean, not as Zepto alone. Are you in active dialogue with FSSAI, CCI, CCPA, and all of these entities, and actually putting forth your point of view? And what really are you telling them?
So look, on predatory pricing, we've said publicly as well, right? FY24 EY audited, less than 0.2% of the units sold on the Zepto platform was sold below COGS, sold below the cost that the manufacturer provides. Less than 0.2%. 99.8% were higher than the price that the manufacturer gave on all the products sold on the Zepto platform. So the predatory pricing allegation, again, similar to the other data-free narratives that were created about quick commerce over the past few years, it doesn't actually stack up. And we're happy to, have anyone that, doesn't believe that to come, into our office and, take a look at our books, because it's a mathematical fact, right? So that's one. The second piece is, on FSSAI, you're absolutely right? There have, been concerns on how we can improve, not us, just an industry at large, how we can make our FSSAI processes more consumer friendly. And, we welcome that scrutiny, right? Like if we get, positive feedback from any stakeholder, whether it's the government or, whether it's, an employee base or a base of delivery partners, we are genuinely in good faith, happy to sit down, solve it, figure out what's the best way that we can improve ourselves, especially if it adds value to the consumer, right? So to answer the question, we are working on, improving it, and we're working on it every day. And even the FSSAI piece you mentioned, it's, something that we actively want to do, and it's, our interests are aligned with the customer, and so we're not at loggerheads with FSCI department, we look at them as a partner that can help us serve our customers better. And that's a good thing for the consumer, and that's a good thing for business. So that's the way that we look at it.
Let's turn to Zepto Cafe now, your food delivery service. How is it contributing? How is it done, first of all? And how is it contributing to your revenue? What are the targets like at this point of time? And there are some reports I was reading that it sort of, brings into the spotlight this whole debate around inventory model versus a marketplace model. How do you look at that debate?
So look, we are running, I mean, they're basically like mini operations that we have, cafe operations in our dark stores, where we're doing, a coffee, tea, and snacks along with your groceries, and it's a service that customers love. Today we're seeing some pretty, phenomenal results. In about 15% of the dark stores that we currently have and we're contemplated to launch, we're already doing 160 crores of top line in Zepto Cafe. We think by taking that 15% number and expanding it to all of our dark stores, 100% of our dark stores in the next few quarters, we will get to 1,000 crore business sometime next year in Zepto Cafe alone. And it's, customers love it. It's giving us more frequency and retention in the core business. People are opening the app multiple more times because they can also get samosas and chai along with their atta and their rice, and it's a good thing. But it's also margin additive, right? The margin on this category is meaningfully higher than FMCG, and it's additive to EBITDA. So it's a big focus for us. We're launching 140 cafes a month right now as we speak, and we plan to, ramp that up until we get to 100% of our dark stores. So it's, it's growing rapidly. Consumers seem to genuinely love it. It shows up in the frequency and retention data, and the margins are pretty attractive as well.
Okay, and how do you look at competition from Blinkit and Swiggy, Instamart, but also now Amazon, because it's looking to reportedly get into quick commerce delivery with Tez. Also, I wanted to ask you, Swiggy and Zomato are now testing the 10-minute delivery, 10-minute food delivery. So, what's really happening? Everybody is running after instant deliveries at this point of time, and there seems to be a lot of interplay going on.
Absolutely. Look, I think competition is a good thing. We are fortunate to have two very high quality consumer internet companies that we directly compete with and that help us become a better company. As a result of that, we've learned quite a bit from them. Hopefully maybe they've learned something from us. But what I can say is that the market is genuinely quite large. I think competition is a good thing, right? It improves execution. It makes us work harder. And yeah, I mean, I think, everybody from a Flipkart to an Amazon to a Big Basket, and then obviously the larger players like Instamart and Blinkit, if they continue to execute well, they'll build large businesses. If we execute well, we'll build large businesses, and there's plenty of room for everybody. So we're not, I think we feel good about it in a nutshell, and we just focus on our own execution.
So not daunted by competition is what you're saying. The market is big enough. There's a lot of runway for growth.
I think that, the biggest thing that we can crack and focus on to add value is our own execution. So, we're just focused on that, right? We don't think too much about competition. And we, think that the market is large enough, like you mentioned.
Gig workers' welfare, a big topic of discussion, big priority for government right now. Labour Ministry is in the process of implementing some sort of a social security framework for them, for their welfare. Your thoughts on it, also government has asked the tech portals to get the gig workers, onto the eShram portal. How is Zepto aligning itself to all of these efforts, and really how do you look at this whole space of gig workers' welfare?
Absolutely. I think, look, like I mentioned, we're always, happy for feedback on how we can improve. There are structural market forces, right? There's a certain amount of supply, a certain amount of demand. Would I love to, 3x the compensation of all the delivery drivers on the platform? I would love to do that, but it's not possible, right? Financially speaking, and there are structural supply and demand elements in labor, right? But other than that, other ways that we can improve what we already do, we're happy to do that. I think we're already quite decent. I wouldn't say that we are, best of the best, but I think we pay, a reasonable wage. We've got, 1 lakh insurance covers for all our delivery partners that they can redeem. We've got 10 lakh term insurance. We give them support with access to financing. whether it's education financing for their children, whether it's vehicle financing. So we are supportive, right? Even softer elements, right? Like giving delivery partners shelters in our dark stores, right? Whether there's a heat wave or there's rain, right? Or giving out N95 masks in Delhi NCR right now, right? We genuinely are trying to make their lives a little bit easier, and we are happy to engage with the government on anything that they think we can do better within obviously the same structural supply demand constraints that all of us have and all of us adhere to, right?
Right. Adit, is there a number you have in mind in terms of the IPO mop-up? How big would the IPO be? Or is it something that is still in the works?
Still in the works. No exact answer for you right now, Mamita.
I provided you an escape route by saying that.
Yeah.
But before I let you go, Adit, I wanted to ask you to use Zepto like a verb. Do you Zepto yourself every day? Do you buy your own groceries? Are there times you do both? How does it work for you?
Every day in the morning, I order an iced Americano from Zepto Cafe and a muesli. We have a strawberry muesli that I have every day. And I get quite a lot. Yeah, I get pretty much, I would probably order, without exaggeration, 3 to 4 times a day. I'm like the ultimate Zepto power user, right? And I've loved this product since day one. So yeah.
Also, since we talked about gig workers and their conditions, CEOs and founders in this space are often known to have been into the whole thing of delivering themselves at times, to go out and speak to the consumer and see what are the issues there, if at all consumers face that issue, or to even get a direct feedback, or to understand what delivery partner goes through when they go out and deliver. Have you done that?
Absolutely. I think whenever there's a festival or a major event, like whether it's a World Cup final or Christmas, or even things like Holi, right? Me and the team, we go out there, we deliver. Sometimes we talk to customers, and I go to the dark store pretty often, right? Like KV and I, in the early days, we used to sleep in the dark store. We used to the beginning of Zepto was a lot of groundwork, but yeah, I think we still do it fairly often, and we get a lot more energy sitting. There's a lot more energy in a dark store than in any corporate office, and so I like going there reasonably often.
So dark store actually brightens up the road ahead for Zepto's growth. Adit, one more thing. You started off with Zepto around 17 years of age. You are around 21 right now. Am I right about that?
Yeah, I think we started when we were around. We started tinkering around with a couple of products when we were 17, and we launched the first Zepto dark store.
So you started off with a WhatsApp version of things to start with, and then moved on to a tech platform. What is the road ahead? The question that I wanted to ask you is, you're 21, you're fairly young, you have this huge idea that you've been able to successfully transform into a business model. What is the road ahead for Aadit Palicha?
We'll be building this for decades. I think we've got the opportunity to build a very exciting internet company, and we're going to be just building this for decades. There's not much else that goes on in my life other than this.
Aadit Palicha, it was so wonderful to have you with us. Many thanks for speaking to PTI.
My pleasure. Thank you for having me.